Dividend investing is hands down the easiest way to create passive income, and it's something that I think literally anyone can start doing. The problem though is that for many people, being able to actually live off dividends is going to take a long time and is a goal that just seems so far out of reach, which can be discouraging and leaves many investors wondering, how can I speed up the process? How can I build a portfolio that will allow me to live off dividends as fast as possible? And that's what this video is all about. We'll be discussing how to live off dividends in 15 years or less, which in the grand scheme of things is not a long period of time at all, but I'm telling you right now, it's not going to be easy. It is possible though, if they can put a man on the moon, you can figure out how to live off dividends in 15 years, but getting there is not going to be a walk in the park, I can promise you that. Now, the best place to start when figuring out how to live off dividends is to determine how much you actually need. Obviously, this is going to be different for everybody. Everyone's got a different situation, but technically you should be able to start living off of your dividend income as soon as that income can cover all of your monthly expenses. If you think about it, you go to your job to pay your bills, but if you reach a point where your dividend income is able to cover all your bills, then at that point you really don't need that job anymore. You have the freedom to retire whenever you want. Along with that though, another factor that you need to consider is what sort of lifestyle do you want to have when you stop working? Are you okay with going bare bones and just being able to cover your bills, or are you hoping to be able to do that and have enough money to travel and enjoy a generally more comfortable lifestyle? By getting all of this figured out, you can then start game planning what your portfolio is going to look like and how much you'll need to invest every single month to generate your required amount of dividend income to live off of within 15 years. Now, there's a few different ways you can go about doing this, and they each have their pros and cons, but the first approach would be to invest in something lower yielding that offers more dividend growth and capital appreciation, like VIG, the Vanguard Dividend Appreciation ETF, whose strategy is to hold companies that have a record of increasing their dividends over time. And it contains over 300 really great ones like Microsoft, Apple, United Health Group, and all the others listed here in the top 10. Now, VIG has done pretty well in terms of share price growth. We can see that across the last 5 years, their share price is up 60%, which is very nice. And then if we zoom out across the last 10 years, we can see that these share price returns have about doubled and they're up 135%. Now, like I mentioned, VIG is a lower yielding ETF with a 1.9% yield, but I will say the dividend growth does live up to its name. We're getting some really good dividend appreciation here with a 5-year dividend growth rate just under 10%. Now, although VIG is a pretty solid ETF and would certainly give you exposure to a lot of really great companies, ones that you can feel good about holding over a long period of time, because the dividend yield is so low, you would need to invest a lot of money to be generating enough to live off dividends in the next 15 years. Like, let's say hypothetically you needed to make $60,000 in passive income per year, which I think is a nice round number. I think that's pretty average. You're gonna need to invest like 6 figures per year, and I'm not even joking, to be able to make that much in dividend income. If you started with an initial contribution of $10,000 in year 1, and then like I said, invested 6 figures, exactly $100,000 per year over the next 15 years, in that 15th year you would be generating just over $60,000. You'd barely make it. But on the bright side, you would have a $3.1 million portfolio, which is pretty impressive. Now, the bad news is that obviously investing $100,000 per year is a pretty unrealistic amount to pull off. I mean, that's just an insane amount of money. But the good news is that number one, it's still technically possible. You still could do it if you were balling like that. And number two, at any point, you could sell out of your VIG position and reinvest into higher yielding assets, which would leave you with a higher amount of dividend income. For example, instead of investing $100,000 per year, let's say we cut that in half to $50,000, which is still a lot of money. That's almost $4,200 per month. By the end of the 15th year, you'd only have half the dividend income, so just under $31,000, but you'd still be left with a $1.6 million portfolio. Now, what you could do with this, like I said, is liquidate your position in VIG, and when you account for a 20% long-term capital gains tax, you'd be left with nearly $1.3 million, which is not too shabby at all, and you could then reinvest this into a portfolio that yields 5%, which I think is totally doable, and this would bring in about $64,000 in dividend income per year. That's perfect. So that's one way to go about it, and then another strategy, you could actually just flip the script and pretty much do the exact opposite of the first example. So instead of a low yield, high growth situation, we would instead look at something with a high yield and probably not much growth, something like a JEPI, the JP Morgan Equity Premium Income ETF, who currently has a 10.5% distribution yield. And to generate $60,000 of dividend income within 15 years and investing in something like Jeppy, you'd only need to invest $20,000 per year, which comes out to just under $1,700 per month, and I'm accounting for a slightly lower distribution yield than what we just saw too. And on the surface, this sounds like a much better way to live off dividends in a short amount of time. I mean, you won't have to invest nearly as aggressively. But there's a lot more risk that comes with investing in something high yielding like Jeppy that, at least speaking personally, would make me not want to put all of my eggs in that basket. I mean, first and foremost, Jeppy and all of the funds like it pay a variable dividend, which means that your payments will go up and down every single month depending on how successful the covered call strategy is. And it's important to remember that none of these funds have been around for any extensive period of time, like a few years max, so there's really no predicting how they'll perform as time goes on. Although the yield is nice and I actually do have a little bit of Jeppy in my portfolio, I would never base my entire retirement strategy around a fund like this. It's tempting, but it just seems like trouble to me. And this brings me to the third way that you can go about living off of dividends within 15 years, which is kind of a hybrid approach between the first two in the sense that we're starting with a pretty respectable dividend yield, but at the same time, we'll be able to benefit from a decent amount of share price appreciation and a lot of dividend growth. And it probably won't be much of a surprise to some of you viewers out there, but this hybrid approach would be to invest in something like SCHD, the Schwab US Dividend Equity ETF, which I think is the holy grail of dividend ETFs. And on a total return basis, it's outperformed both of the other funds over the last few years, and as we can see, it has some very well-rounded dividend stats. They have a solid yield and an incredible dividend growth rate. Now, to make $60,000 in 15 years with SCHD, you'd still need to invest a lot of money, $38,000 per year, which is almost $3,200 every single month. I mean, like I said at the beginning of the video, guys, this wasn't going to be a walk in the park. This is serious money. And with that said, as far as which strategy is best to live off dividends in 15 years, it's really tough to say because none of them are perfect. But if it was me, I would probably just slow things down a little bit, extend my time horizon, not by much either, take it from like 15 to 20 years, so only add 5 more years to that. And then I'd invest as much as I could into something like SCHG. I just think it's a really well-rounded fund for the passive income investor. Even though I understand wanting to live off dividends like as fast as possible, trust me guys, this is something I daydream about every single day. It's important to remember that dividend investing is a long-term game, and it's most definitely not a get-rich-quick scheme, which is why I hope you don't just go dumping all your money into Jeppy, and please, for goodness sake, guys, don't go putting it all into Tesla, TSLY either. And I know it seems like it's gonna take forever to see results, especially if you're towards the beginning of your investing journey, but I promise you, you will reach a point, and it will happen sooner than you think, where that dividend snowball really starts to take off, and that's what I'm telling you about in this next video right over here. I'm gonna share with you where this point is, when it happened for me, and also what it's gonna take for you to reach this point in your investing journey. So click right over here to learn all about it, and I'll see you in the next one.